Hope everyone had a pleasant day through the chop today, as expected. It is February 19th, March 19th. You can tell I need a nap. March 19th, 2024. S&P futures currently at 2775. I think we put it in all-time new closing high on the SPX into that close, wildly enough. If I'm, is that correct? Am I hallucinating? Yeah. Wow. Holy Toledo. Okay. Yeah. Wild stuff. That really snuck up on us, huh? The Nasdaq futures up 52, 18,283.50. Bitcoin, beautiful bounce here, 63,762. Crude up 0.33, and gold 2161 down three and a quarter. Did I get a hold of Elon's stash? No, man, he keeps it locked up. I still don't know what ketamine does. Probably don't want to find out. Anyways, so yeah, a lot of volatility is expected today. Whole lot of chop also. We have, let's go over the indices by the numbers. The Dow Jones up 0.83%, S&P 500 up half a percentage point, Nasdaq up 0.39%, gold settled lower 2161.20, WTI crude at 82.74, settling 82.74, the VIX 1381. Somebody better poke it with a stick, make sure it's still alive. The 10-year at 4.298. Not a whole lot of action there in the 10-year. Yeah, so we had, let's look at our index ETFs here for a second. We'll start with the IWM. The IWM today, you had a nice piercing reversal here right into the 21. You got to get through 203. The diamonds, beautiful, not beautiful, but a strong buy setup here off the, we had a double inside bar, and they triggered over through 388.85. Pretty good stuff. The triple Qs closing back above the daily 21. A little bit of a piercing reversal there as well. And finally, the spiders outside bar reversal, closing above yesterday's high. Solid stuff. The SPX, as you can see here, oh yeah, it looks like we had an all-time closing high. Very, very strong stuff. So you look at a chart like today's and you say, the daily chart, it looks like it was business as usual. Nothing could be further from the truth. We started out as a down day. We started out as a down day today. The obviously, Nvidia today was the tail wagging the dog. Nvidia, wild moves today from high to low as usual, as one can expect. We had a 850 to 905, so 55-point range in Nvidia. Not a small chunk of change there, and so a lot of this intraday volatility, in my opinion, caused by Nvidia. It declined as much as 4%. As the sell of the news response following the company's introduction of the Blackwell AI platform, and began to rebound midday, right as we were calling that wedge reversal in the Qs. So definitely Nvidia dipping the market and then rescuing it, in my opinion. We also had what looked like a lot of short covering there after 11 o'clock. So we have some real cross currents. We've got the FOMO in terms of missing out on a potential rally tomorrow, and some short covering bears, in my opinion, bracing for impact. So we'll see. What happens. We had broad-based gains off the lows. 9 of the 11 S&P 500 sectors ended up higher. Real estate and communication services were pretty much unchanged. The energy sector gained. This is the XLE here, gained over 1 percentage point today, and I think it was today's best performing sector, if I'm not mistaken. Yeah, the XLE. We also had strength in the XLI today. Industrials moving really well. Financials doing their job. Utilities also being bought up today. Consumer discretionary also holding up. Healthcare holding up nicely. So, as far as the breadth of market today on that bounce, really not bad with 9 of the 11 sectors moving higher. So the 2-year note yield dropped today 4 basis points. But you saw, if you look at the TLT today, just not a whole lot going on there. Pretty mediocre session to say the least. This on the heels of a BOJ decision that precedes the FOMC decision tomorrow. So the Fed tomorrow is widely expected to leave target rate unchanged at 5.25 to 5.5. So it's all about the dot plot tomorrow, right? The summary of economic projections, and we'll see how many rate cuts they have in store for us. And the other thing we're going to need to see is, does Jerome Powell give us a nice dovish avuncular press conference tomorrow, or does he go into angry dad mode and wag his finger at the market? So we'll see what happens. Goldman Sachs, Bank of America, many analysts are now basically estimating 3 rate cuts before the end of 2024. So any divergence from that is definitely going to be a surprise, and we'll see how the market copes with that particularly. I wouldn't be surprised if they said 2. We'll see. Okay, so that is basically the long and short of it. The calendar for tomorrow is pretty clear and straightforward. We've got Atlanta Fed business inflation expectations at 10, at 10:30 EIA petroleum status report, and at 2 p.m. an FOMC announcement, followed by the 2:30 p.m. Fed Chair Conference. We have SPX closing at all-time highs today in anticipation for what could be, the green flag for a whole new leg higher. My target on the S&Ps for the year remains 5,400, and if that gets taken out, 5,700. We'll see. We're going to have to wait and see how Jerome Powell navigates the murky waters of monetary policy announcements tomorrow. Okay. Have I been practicing SAT vocab with your son? No, that's just how I talk. It's stupid. Sorry. Did I avuncular? Oh, I don't know. It sounds better than uncle-like, Judy. That's just, economy of words, baby. Anyways, so back to business. So not a whole lot on the calendar for tomorrow. Obviously, the FOMC announcement is going to take absolute precedence. Tomorrow we got Pinduoduo, General Mills, Chinko Solar, and BioNTech before the open, Signet Jewelers, and after the close, Micron, Chewy, KB Home, Five Below, and Steelcase after the close. The NVIDIA GTC conference continues tomorrow, and we also have shareholder meetings from SNPS, Solo, and FLNC, investor calls from SNPS, CX, CPG, and ALTR. As far as other conferences going on tomorrow, we do have the Game Developers Conference. There could be some news out of that. We have a KeyBank Life Sciences and MedTech Investor Forum tomorrow as well. Morgan Stanley has a Latin America Executive Conference. I don't think that's going to move anything. And Piper Sandler with their energy conference. So that's what's going on tomorrow as far as conferences. And AVGO at 12 p.m. will host an investor meeting on enabling AI and infrastructure. Reddit shares tomorrow are expected to price for IPO. I guess they go live on Thursday. All right. So that's what's on the calendar for tomorrow, guys. I did not do a whole heck of a lot today. I traded the open using the weakness in NVIDIA here through 862.50 for a short ride into the lower band around 853.50. Locked that in. Trailed out of the rest a little bit, but solid short. And then I started long AMD, caught a pop, trailed out, and then shorted the break of 182, the break of the VWAP 183. Sorry, we took some off here around 179.70, I believe, and then 177.60, 177.70, something like that. I trailed out of the rest here off this saucer bottom, so that kind of just made my day into the close. Really like this consolidation in NVIDIA right here. Had a little falling wedgie here into the anchor VWAP. Caught a bunch of this. I added on the pullback and then ended up trailing out as the S&Ps were just rolling over here pretty hard. We expected this potential rollover. You had, I guess, a two-wave corrective here, and then a saucer bottom and a run to the highs. So the price action was definitely volatile, irascible, and capricious. 3 for the price of 1. But, there was definitely some money to be made today. Just very, very carefully, I guess. So that is my day in a nutshell. I'm glad I stuck to my plan, which was to really not trade the market too aggressively, chill out, hang out, keep my powder dry. We did call a nice wedge reversal in the triple Qs here, and that was the reversal on the day. So we did a pretty good job identifying the demand zone and identifying the reversal. The trade of the day, which I ironically didn't take, was ANET, which we called out as a trade idea here for a move off the lows. Just a monster move there. About 15-point move in ANET. Hope somebody took it. Really, really nice reversal there off the lows. Let's see. What is that, John B? What's that screenshot supposed to be? I don't understand. Can you go over how you saw that A01 wedge so far? 24 years of staring at the same chart over and over would be the short answer. So again, as primarily a guy who's trading market structure, okay, this is what I'm looking at, okay. So we have in this consolidation here a strong shakeout, and you can gauge how strong this move was here in the Qs. So the first thing I'm doing, right, is identifying this demand zone here and identifying the fact that every time we come into this level, we get catapulted higher, right? This tells me that we are consistently defending the 435 and a quarter handle, okay? So we came in on Friday, closed here Monday. We receded. This morning we opened right back near that demand zone, okay? And what I saw early in the session was a tremendous high volume push to get the sellers past 433 handle. They couldn't do it. We had a voluminous bounce and a higher pivot low. Once I see this, okay, I'm putting this. I'm putting the picture together very quickly, right? Because I know my levels. My just kind of structural map tells me this is a very high demand zone, okay? Whenever the market comes into this level, okay, bulls tend to buy it up. We have an FOMC tomorrow, and there's a high potential for a potential. There's a high degree probability that the market likes the FOMC announcement, and we go higher. So knowing that and knowing that we're in a demand zone and seeing the pattern before me, okay, and we were seeing, we were coming in lower, seeing oscillator and price divergences here, and seeing a very strong reversal pattern into a demand zone. The probability is that we're going to get an A1 wedge reversal. You know what I mean? So that's what I was looking at. My pleasure, Bobby. So that kind of for a lot of people that was their trade of the day, uh, and it was it was a very nice move for sure. Very nice move. Yeah, good stuff. Let's see if we have any emails from you guys, any trade reviews. Okay, no trade reviews. Wow. Okay. Anything you guys? Yes, I anticipated that would be a zone that would bounce for sure, Bobby. Any emails? Excuse me. Any questions you guys want to go over on the day or technical analysis in general? Nice, Joseph. I'm glad that's working out. Andrew must, yeah, he's out doing push-ups in the woods. Oh, no, there he is. Any opinion on ES overnight? I imagine it's gonna chop around, John B. Oh man, I'm sorry, Andrew. That's terrible. I'm sorry to hear that, brother. That stinks. Yeah, I stopped out. Did you guys hear me say I trailed out of Nvidia here? Yeah, okay. So Nvidia, here's what we liked about the trade, okay? So Nvidia, this is how I saw Nvidia, all right? So Nvidia here is, here was the climactic sell-off, right? Two-wave corrective turned into a right shoulder, and then they gapped it lower. You see that? So we came back in here, took out the prior top of value, bounced, and then we took out the prior VWAP anchor and held the lows. So on the 1 minute chart, just so you can see what the price action looked like, you see what I'm saying? So we had this was in the Qs, this was the reversal we called out. Okay, so obviously we caught the last little tip here. But so basically you channeled higher, changed angle of ascent, flagged, popped, falling wedge, and clearly here, right, what we were looking for was price acceptance over the level, right, which was 893.60. That's when I started saying, guys, Nvidia looks really good here. And what I was thinking, okay, was, all right, we're going to continue along this angle of ascent now, okay? So now that we have price acceptance over the level, I would imagine pop, bounce, into the close. Now, unfortunately, the S&Ps had other plans, and as you can see here, we did catch this little ledging type of action and said, okay, it looks like the market wants to go lower here. Careful. So on Nvidia, I trailed out at break even. So around 894.50, I think, something like that. So that was, when the market fell apart and Nvidia looked like it wasn't going to hold the level, I exited. Now, just an important note here. When I'm seeing a shakeout tail into the 21 like that, and the market is looking strong, okay, I'll wait for this candle to close. I'll wait for another one to see if it takes it out, because more often than not, you get a nice shakeout hammer, a little buy setup off the 21, and you have continuation higher. But that's not what the market was doing. The market was doing what we feared it would do, okay, which was a narrow ledging kind of ascent on a shallow angle and a two-wave corrective flush. So because that happened, I just set a hard stop near my break-even entry and just exited the trade. I did take half on the pop, so my risk was financed. So it wasn't a total waste, but that's why I elected to just exit break-even and not even wait for the shakeout, because this looks very distributive here, right? This looked like a distribution top that could have potentially retraced all the way to like 52.17, 52.20. So that's why I exited, right? Nice, Tony. All right, good deal. Great questions. JR, CENX, will you show us how the pattern CENX? What do you want me to do with CNX? Century Aluminum. Okay. You show us how your pattern structure are. Sure. So CNX has been basically. Let's go to the weekly. So this is a fallen angel, right? This is a stock that had a very aggressive angle of ascent out of an IPO base, and then has had what looks to me like an unrecoverable drawdown. That's what Larry Williams would call a fallen angel. Since then, okay, it's been basically trading around the bottom of the range, around 672. So a chart like this is fundamentally broken, okay, until it starts to take the upper end of the range here, 1550. But then you've got all these stuck prior buyers, now sellers, making this ascent very difficult. So you can see how many failed breakouts this thing has had. So 1, 2, 3, 4, right? So this is the type of chart I avoid like the plague. This is just you know. You got it, John. I'm glad you had a good day. Exactly. Very Fubarish. Yeah, absolutely. So, you know, this almost looks like one of those penny stocks that constantly try to break out of weekly basis, spike up for a few days and fail. So I see a chart like this, I stay as far away from it as I can. How about LSXMK? LSXMK. Oh, serious, yeah. This one has made lower lows on the weekly, and it's clearly in a decline. So, another no touch. It's a short, I guess. Yeah, so AMD, it was a nice one, you know. Days like today are very frustrating because you really, you know this market has so much potential, and you know that people are just sitting around, not putting a lot of risk on. So AMD today, we expected AMD to give us an initial pop off the lower anchor, and it did just that, right? So this was purely technical, okay, purely technical, and you had a secondary resistance pivot here. So we knew. Here's what I knew this morning. I knew that there was a high probability that AMD would bounce off the lower VWAP anchor, and then it would run into some sellers here. So we took a position long, sold half the pop. I was hoping for a two-wave corrective. We didn't get it, and then when it failed to bounce here, you see this. I'm using the 1 minute chart just to illustrate price action, not that I was trading it. But you see how the buyers has failed to buy and hold VWAP here. Entered right there at the break of VWAP and covered into the lows there. I did have a little bit left for a runner, and then you saw here your rounding reversal bottom, multiple pivot lows, and then finally they took out the tops line and ran with it when the market started running. So, how's your day, Stu Shop? Yeah, so my stop I think was 178.60, right? So it was this prior pivot high here, 178.60. Ironically, it went lower again and then higher, and then it went out. So it just took me out. Yeah. But overall, good session. Nice trade on AMD. That was a nice move there from 183 all the way to 177. Not a bad move. Again, you have a market where participants really are there's a great deal of uncertainty as to what the Fed's going to do. There's uncertainty about whether we've topped out on semiconductors. Uh, People are expecting a pullback in the markets, and you see we made a new closing high today, right? So it's not a clear picture fundamentally or technically as to what things are going to do, and you see that reflected in the price action. You know what I mean? People are buying demand zones and selling supply zones. Typical typical signal sign of a range bound market. Okay, you didn't. Oh, it's okay. Maybe you're just a long bias traders do shop. Some people are just long bias traders. Some people are just Canadians. You know, nobody's perfect, bro. You know what I mean? All right, cool. You gotta love the Canadians. Give them some love. All right. All right, guys. What else? Anything else we want to talk about? VR. Say you have a dozen charts to look at monthly, weekly, and VR says you say you have a dozen charts that look good on the monthly, weekly, and are giving you an entry on the daily. What are some additional criteria you'd pick for the best candidates? I look at sector strength, relative volume, overall structure, in terms of where that chart is relative to the market cycle. You know what I mean? Like, for example, if I have say I'm trading Alcoa, right, and Alcoa has been doing this, right now it gives me a beautiful cup and handle, right, but maybe basic materials and industrials are on a third leg higher and they're totally overbought, then this isn't maybe the best swing trade candidate, right? Because maybe this is the trade that's going to break the cup, take out the buy point, and then trap all the bulls. So the stage of the market stage is really important in terms of that sector and the overall market. That's a big one. Relative volume, and yeah, those are the things I look for. You'll be ready to battle. All right, Bobby. Can you squeeze a session on volume sometime? We talk about volume every day, Joseph. Volume is really important. If you stick around in the room, I don't really trade open houses any differently or act any differently during open houses as I do during their regular hustle bustle. So I comment on the market and draw examples every day. So it's a very interactive environment. On international paper, it looks good. It made it to my watch list today. So I believe TDV pointed this one out like 2 or 3 weeks ago. TDV is one of our traders, excellent trader. And we were looking for that voluminous breakout. We got it today. Okay, this is the beginning of a sequence. So now, on the daily and the hourly, I'm going to be looking for either slow or fast schematics to enter the trade. And we got to get through 41.76. This thing looks like it's going good for $60, in my opinion. So, Yep, Amber has open house specials for you guys. Can you look at MNMD? They should have just called this one Shroom. Yeah, so let's go to the weekly here. So MNMD, you can see here, broke out of a very shallow base, and it's gathered some momentum, and it's wanting to break out through $10. Yeah, this thing looks like it's good for 16, 17 bucks. I mean, something spectacular would have to happen for this name to see prior all-time highs, but there might be a reversal there. Palantir, sure. PLTR. Know this company very well. So Palantir broke an ascending triangle here and is consolidating. Very messy consolidation. On this one, you got to look to the left, okay? Here was the redistributive structure that broke down. Top of value is 27.01, okay? Which it's not a coincidence that buyers came in here and had to deal with this prior overhead supply. So this base, if you're going to use time symmetry, unless something special happens with PLTR in terms of, you know, base symmetry, the way I look at it is this could base here until October before it goes again. So you know, it is a very bullish base, and this is the angle of ascent I would plot. Okay, but you could come all the way down to 2047, 2050, and still be in a bullish context here, coming out of this saucer bottom. So you can see here, saucer bottom, minor handle, pop, higher pivot low, pop, falling wedge, and now you're at the top of the channel. So really bullish chart overall. This base here, given the prior redistributive base here, you know, if you're going to look at base symmetry, it could take a while for this thing to take out these highs at $30. Just my 2 cents. I am thinking about this wrong. A large volume move up implies that a lot of buyers are now in the market, thus less upside potential, or is it more like large volume up move will convince even more buyers to pile in? So markets can move up on very low volume, Joseph. They can move up on very high volume. It's not always volume and price are not always correlated. If you look at the if you look at your Momentum Mastery cheat sheet in the files, we actually have we go into this very heavily in the course, okay? But this is one of the things that most people don't understand properly. So let me show you. And it always surprises me that people make assumptions about volume. So this is our volume matrix, right? You have convergent and divergent volume for bar follow through, bar development, impulse moves, legs, and support resistance. And you have to treat volume as convergent or divergent based on every part of the price cycle, right? So it just depends. Remember, volume is only as basically it's like the gas you pump into the engine, right? What's going to be determinative of price is buyers and sellers, right? So say for example you have a very high volume initial move, right? What would you say is more bullish? For the inside bar to have high volume or for the inside bar to have low volume? What would you say would be more bullish? And what would that mean? Christian says low. What do you think, Joseph? Michael says low. Okay. Yeah, technically or typically, after an igniting bar, you probably want a low volume bar, and that typically tends to be indicative of not a lot of people really looking to auction at that level, right? And not a lot of sellers willing to sell the price lower because they're afraid of getting squeezed. However, if you look at the SPX 2020 to 2022, it went like this. Volume went like this, right? How is it possible that a market can go higher on lower volume? How is that possible? Yeah, exactly. No one is interested in selling potentially trending market without any reason to, right? So the volume and price are not always convergent. They're often divergent, and it's your job to figure out whether that divergence is to your benefit or not. You know what I mean? So today, prime example. Remember, Joseph, we were talking about the S&Ps, and I said, guys, careful here. I'm seeing, uh, I'm seeing volume and oscillator divergences here, and we're going higher on lower volume, right? We're going higher on lower volume. So when I see a structure like this, what I'm thinking is, okay, we're going higher on lower volume, and are the candle bars getting bigger or smaller? Smaller. Okay. There's no fundamental difference in this picture here with volume RSI divergence and a very heavy grind up on low range. There's no real technical difference between that and a rising wedge, right? It's the same idea, okay? When you see a rising wedge on low volume and a diverging oscillation, you get very much the same effect, right? The range of price contracts, okay? And before you know it, the range of price is so low that the market has to make a decision. And when you see these types of divergences and volume is weak, the move can no longer be sustained. And where does everyone has their stop here? Most of these people have their stop around the pivot lows of this bar, and it causes these violent two-wave corrective liquidations. So volume is, it's really hard to have hard and fast rules about volume. It's highly contextual to everything else around it. You know what I mean? Would you say volume typically increases at inflection points? It often does. It'll increase at levels people think are inflection points. And it'll also increase at levels that are obvious stops, right? Areas where you have clear stops. You know what I'm saying? So, VR, can you please discuss position sizing and which general points you look to take profits? Sorry, I haven't taken. No, it's fine. You haven't taken my course. So position sizing for me is based purely on risk. Okay, so if I'm gonna take, I don't know, say NVIDIA, and I see a, $1.50 move until my stop hits, and my max loss is $300, I'm taking 200 shares, right? So I'll typically have 5 tiers of risk, right? All right. So my lowest risk tier is about $500. That's the max amount of money I'm willing to lose on a trade. So if I have a $2 stop and a $500 max risk, how many shares am I taking? Anybody? Not a trick question. 250. Everybody's asleep at the wheel. So again, I size up based on the risk tier I'm in. Now, we do a lot more sophisticated things in the room, right? We'll build positions slowly below our designated risk tier and start to add to the trade so that we can realize a lot of upside with very small initial downside. All right, but that's for another day. Nap time on the East Coast. Yeah, I hear you. Well, it's nap time over here too. You don't see me complain, Bobby. All right. Michael M says $500 share price. I'm really good at napping, that's for sure. Olympic grade athlete at the nap game. Back to the inside bar with lower volume example. Wouldn't decreasing spread equal decreasing result? Decreasing volume equal decreasing effort? Not if it's a resting bar. Like, people know what game is being played, right? So if you have an igniting bar here, and then we hold the upper end of the range here, and volume looks like this, right? It's far less concerning that an igniting bar that goes like this than a shooting star. If I see a shooting star like this, and volume looks like this, I'm often getting ready to short. You see the difference, TG? The bulls tried an opening range breakout. They failed to get past this bar on huge volume. So here you have a huge effort and a failure. On a quiet inside bar here, okay, on low volume, that doesn't necessarily scare me. ATOS. Atosa. Atosa Therapeutics. Oh my God, David W. David W., go to your room. Oh my gosh. Bro, don't make me call your parents. What are you doing? Okay. All right. Oh, jeez, Louise. Okay. Reverse split much? Okay. All right. David W. This. Are you in this thing? I'm afraid to ask. So penny stock, obviously underneath the weekly 200. Look, every attempt to break out of this range fails. I don't see any likelihood of this. You're in for $100 worth of profit. All right, sell the thing and we'll split it on tacos. How about that? No, I'm just kidding. Not trading or barbecuing advice. Just a joke. Yeah, total train wreck. Dude, if I had 100% profit in this piece of hot flaming garbage, I would pay myself and buy my friends a drink. Just, I don't know enough about this name. Maybe they have a huge catalyst coming up, and they're gonna cure, erectile dysfunction, male pattern baldness, and whatever else, and be the next Lilly. I don't know anything about it. I just know that this chart is usually a tale of woe, and it's not going back to $2,250. Probably not. Okay, liver cancer drug. Okay, cool. What are you thinking of Solar's? Valuations appear very attractive. Hell, the list. Yeah, so Solar's. So if we get a dot plot surprise tomorrow, and rates plummet, the solars are gonna rip. Industrials are gonna rip. The solars are gonna rip. You're gonna get a nice wedge reversal here. Gold's gonna go bananas. So pick your poison. Gold, industrials, financials, and especially the regionals and solar. I don't know if they stick to I don't know, more than 3 rate cuts. I don't know how they would feasibly do more than 3 rate cuts, but or even if Jerome Powell has a very dovish press conference and talks about the market turning a new monetary policy page and it being time to cautiously lower rates much further. You're going to see bonds, gold, the 10-year go absolutely bananas. Not to mention solars, industrials, and gold. So, what's your expectation? I have no idea, Michael. When the market's doing it, I'll know what to do, but I don't know which way they're going to go. Does PDD look like a potential failed breakout above the descending trend line? We traded this one a few times this year. Most of the time to great effect. So you had a major failure here at 150.60. I remember this one. They broke the flag on the weekly. I don't know. A little bit of no man's land. You could make the argument that it's holding this trend line thus far. I'm kind of done trading the Chinese names for the year. I don't like the way it looks. Pacey. Prolong. Okay. So I'm just going to highlight the obvious, right? This chart is in a very bearish it's in a very bearish type of downtrend here, and you got all eyes on 140, 150, 149.90. There's a good chance this thing rolls over, so this would not be the chart I would look to be longing, right? These are the charts I want to buy the dip on. This I want to be involved in. Paycom looks like a crapshoot in either direction. I don't see, for how I trade, I don't see a big edge here. This thing is weak, and there's no guarantee it's going to hold this double bottom whatsoever. So, not for me. Do you use limit or market orders to enter next trades? 99% of the time I'm using limit orders. Limit orders, buy stop limit orders. And sell stop limit orders. Yeah. If I have to get out of something quickly, or maybe sometimes news flow, I'll use market orders. But other than that, I'll try to offset. Like if I really need to chase something, I'll do a limit plus a 10-cent offset or something like that. Williams Sonoma, yeah, that one's been really strong. It's a beast of a chart. It's been acting great. I don't trade these names, but it looks phenomenal. Very, very strong. This is a type of chart I like. Pullbacks are viable. Looks like it to me. Looks great. This would be the opposite of good news with calendar getting light versus the election. What's that, Nantucketer? Yeah, the expectations of June rate cut are below 50% now, right? If I remember the Fed futures correctly. I wouldn't be surprised, man. We have some troubling economic data out over the next couple of months, and the Fed doesn't like to cut rates close to an election. It's a problem for them. So we'll see. Microsoft long. Microsoft looks great. It's consolidating higher pivot lows. At this point, we need a clear entry on the weekly. Look how well this anchor here on 406 has been holding up on the weekly. Looks fantastic. I like it. Yeah, there's the election pause. They already have a huge chip on their shoulder, credibility wise, from the whole transitory fiasco, and they don't want to pull the trigger too early and have another 1970s type of scenario on their hands. It's not something Jerome Powell cares to do. The man is obsessed with his legacy, and he doesn't want to be remembered as like Paul Volcker 2.0. Uh, I don't think this market prices anything in. You would think it would, but it doesn't. It's a very strange market. You believe you can't raise? I do. Isn't that good enough for the market to go up? We'll see. I don't know. You know, the nice thing about being a day trader is you just need a plan for the potential scenarios, and you need to be able to carry it out. The whole fortune telling thing is not needed. You know, we don't have to be making predictions. We just have to trade the chart in front of us. You know, Jerome Powell could say things that I consider dovish, and we could have a dovish dot plot, and the market could still sell off tomorrow. Why? Nobody knows. What matters is what we do with the chart in front of us. That's the only thing I care about. I've been right so many times with earnings, with economic data coming out, and the market just went the opposite direction it should have. So I'm out of the predictions game. What I do with the information I have is it's more important. How much cash do you leave in your portfolio for trading daily? I have swing accounts, and then I have a day trading account. My day trading account, unless I'm taking overnights or trades that are 2 or 3 days long, I go mostly to cash. You know, could you look at Visa? Sure. Another monster chart. So Visa. Here was your neckline break. Your mission move 291. This looks like it's going to pull back and go a whole other leg higher. Absolutely amazing. What a company. Really, really powerful. Great chart. It looks like it needs a pullback, but amazing. TLT play levels depending on post Fenway. Yeah, hard to say how much the bonds are going to move. I mean, clearly, 92 and a quarter, and then $100 are the key levels in the range. I wouldn't get bullish till the TLT breaks 95 and a quarter, personally, or breaks down under 92 and can't retrace. But other than that, hard to say. The TMF ETF, yeah, it's a 3x bull, right? Yeah, I don't know. I honestly, I play the S&Ps when that you know, when we get the FOMC announcement. I'm usually just playing the S&Ps. Gold is good. Solars can be good. We'll see. Yeah, Disney sure is creeping higher for sure. Now they got that proxy fight. We'll see what happens. Yeah, we're still here. What's up, Al? Do you think Tesla's rebounding? Well, it had a nice day yesterday, and it's off the lows around 162. You had an inside day after a tweezer bottom. I mean, I could see Tesla doing something like this, and this being shakeout lows. You're really gonna have to see, get it over 184, then fill this gap, and then over 195. It's until that happens, you can extrapolate a minor bear channel here, and there's a massive declining tops line in your face here. So, there's a lot of work, a lot of technical damage in Tesla. T-Man 510 says, thanks in advance. And your T sizing, you mentioned 500 for tier 1. So it's scaling in the same factor. Yeah. My max tier is $5,000. I don't usually risk more than that per trade unless it's crazy news flow. Elon's gotten into drugs, politics. I don't care who people vote for, Democrat, Republican, Hare Krishna. It's like, I don't want to know, you know what I mean? I think he's really ticked off a lot of people with his new, like, Elon 2.0 based edition. It's just, exactly, dude. Yeah, no. Bro, I've been saying forever, I sound like a gold bug. I sound like I work for, what's his name? The gold guy. Peter, what's his name? Schiff, yeah. I sound like I work for Peter Schiff. Gold looks like it's going to 3,000. It looks amazing. No, not Teal. The crazy Peter. The crazy Peter. Let's see. Bunker Peter. JR, thoughts on ITC Daily in New York Times about to announce multi-billion-dollar grant for Intel. Yeah, I saw that. I don't know that it's gonna move Intel. Intel had a nice channel off the lows, and there's your distribution top. Right out of the channel. Here was your up thrust, and now you're consolidating. If they can't hold like $42, $41.80, I could see this going all the way back down to about $32. So, not I'm not a fan of this chart. Yeah. Peter Pumpkin Eater. What? Okay. All right, cool. Anything else, guys, you want to talk about before we call it a night? If not, we'll yeah, I'm gonna take a hard nap. I'm gonna buy calls on my nap. All right, good times, guys. Thanks for sticking around. We have a lot of open house attendees with us. Please, if you have questions, shoot me an email about trading. If you have any questions about your subscription, shoot Amber an email. Thank you to Amber, Eddie, and David for keeping this Mos Eisley Space Cantina from spinning out of control. Great job, guys. How about a hand of applause? Only Eddie got my joke. All right. Anyways, have a great night, guys. We'll see you all in the morning around 9 a.m. Eastern for the pre-market watch list. Take care.